Let's get more about Lyft's quarter with Fast Money friend Gene Munster, founder of Loop Ventures. Gene, good to see you. The stock is surging. Is that warranted?
Melissa, as you know, I take a long-term view. I appreciate my place here on Fast Money, and I'm going to channel my inner trader here. Over the next 6 months, the stock is likely going higher, and I think Tim summed it up very well, is that when we have this return to growth, they're growing at 53% in the December quarter before the pandemic, and they're going to they'll be down about 33%. But as you said, is on the earnings call, the expectation is that we're going to see a bounce back, and I think investors are going to most welcome this bounce back. And the powerful point is that return to revenue growth, along with some of the hard decisions they made around expenses, gets to more leverage. If you back up 1 year, the stock essentially at the close of today was flat from where it was a year ago. And I can see a case where we start to extrapolate to the back half of this year and think about better expense control, that this should clearly go higher. And if I can just quickly finish my thought, I feel this is going higher. But one piece that we have not discussed today is just what is the long-term game plan for these companies, whether it's Lyft or Uber. The ride-sharing, the robotaxi space is going to be different in a few years than what we thought it was going to look like when both of these companies went public. And I think that that is still a long-term unanswered questions for investors. Is Tesla robotaxi, Apple, Waymo, are these ultimately going to be more competitive to their business model?
So longer term, there's an existential threat out there. But for the shorter term, we're going to put our Fast Money cap back on, Gene. When we emerge from the pandemic, which is a better business model, Uber or Lyft?
Lyft is. I think it is. When we talk about simplification of the model, adding food delivery isn't that much different. You still have people coming and picking up items. It really isn't that much. The complexity around Uber has to dealing with all these different countries. Look at how much of a headache the proposition in California was to Lyft and Uber. Imagine doing that over what is 80 plus countries that Uber operates in. I think that is an advantage for Lyft, and my money would be on Lyft over Uber.
So Lyft over Uber, let's say in the shorter term. In the 3-year time frame, the 2-year time frame, Gene, then what? You fill in the blank.
But still, if you, I guess I would insist on owning one of these two for a 3-year period.
Or fill in the blank. Choose another company if you think.
Fill in the blank is we just have to hit the reset button in terms of the investment thesis on this in 6 months. We're going to see a rebound. There's going to be a lot of excitement about numbers going up. The stock, I believe, will go higher. But I think that to answer your question, over the 3-year, we have to see what's going to happen. We think Tesla's going to launch an app at the end of this year, a chaperone robotaxi. I won't get into what that is, but it is. I think there is more competition. Last piece is this. If you think about autonomy and removing the driver, that has been the holy grail to get leverage in these businesses. But you start to add other tech companies in the mix that are also pursuing that. Right. Then you get a race to the bottom in pricing. And I think that that is the ultimate headwind about some of these other tech companies getting in. It's not that Tesla or Apple or Waymo is going to have big market share. It's that they're going to have enough to corrupt some of this pricing leverage that they've enjoyed over the last couple of years.
Chaperone robotaxi. That sounds like a job for Guy Adami. Gene, good to see you. Thank you.
Thank you.
Gene Munster, Loop Ventures. By the way, we'll have much more on Lyft's quarter tomorrow on Squawk Box and a first on CNBC interview with the Lyft president, John Zimmer. James McDonald, final word here on Lyft, your outlook for this company, and the notion that as more tech companies enter this business at large, the pressure increases tremendously.
I respectfully disagree with the thesis that complexity contracts opportunity. If we looked at a situation 15 years ago, a little company called Amazon.com pivoted above and beyond books. You know, Borders and the other big bookstores stood the books. And where's Amazon's market cap? Because they took their early entry and their disruptive ability to deliver things onto a whole new level. And where I like Uber over Lyft in this situation is their flexibility to be the delivery channel for whatever. To whomever, and that positions them for quite a few more revenue streams.
Shepard Smith here. Thanks for watching CNBC on YouTube.